A benchmark is a standard or a point of reference against which things may be compared. In sport, it might be a world record time or number of goals scored. At school, it might be Ofsted rating or exam league tables. When it comes to investing, a benchmark is something we use to compare the performance and asset allocation of a fund. The most common benchmarks are market indices, a reasonably large number of companies that together represent the entire stock market. For example, many of us are familiar with the FTSE 100. This is an index of the 100 largest publicly listed companies in the UK. This is used as a proxy for the entire UK stock market. You may also be familiar with the S&P 500, which is an American equivalent of its 500 largest companies. There are numerous businesses that build and provide benchmarks for investors to use. Some of the more well-known ones are MSCI, Dow Jones and JP Morgan. They not only provide benchmarks for the world's largest stock markets, but also for less mainstream areas such as the healthcare sector or the Indian stock market. Investors can see if their US equity fund has performed better or worse than the S&P 500, for example. Another benchmark that is often used in investments is the peer group average. Funds are usually categorized by sector, with each sector containing a collection of funds that invest in the same geographical areas or asset class, such as global equities or sterling corporate bonds. Investors can then see if their fund has performed better or worse than its peer group average. Benchmarks have two main roles. As we've already mentioned, one is to compare the performance to see if the fund is doing better, outperforming, or worse, underperforming, than its index or peer group average. The second is to see how an active manager is allocating their assets. When we talk about asset allocation, we often talk about a manager being underweight or overweight. And we're not being critical about someone's waistline. We're actually talking whether they own more or less than a sector or geography than their benchmark. For example, let's go back to the FTSE 100, which contains a large amount of oil and gas companies, just over 17% at the time this video was recorded. An ethical fund is likely to invest in very few companies in this sector, if any at all, so it will be underweight. Likewise, the MSCI All Country World Index has 2,700 companies from 23 developed and 26 emerging markets. At the time of this recording, 54.4% was in US companies. If a global equity fund has 60% allocated to US companies, it would be deemed to be overweight. You can invest in an index fund, one that simply tracks an index. But if you want your investment to be able to go overweight or underweight an area, to make the most of opportunities or avoid or sector or geography that may be struggling, you need to invest in an actively managed fund. It's an active manager's job to decide what sectors, geographies or assets they want to have more or less of. Going one step further still, some managers are what we call unconstrained. They simply use the benchmark as a loose target and are able to pick stocks with complete freedom. They don't have to keep within parameters such as plus or minus 5% of the benchmark weighting. It takes skill to pick the best stocks and decide where to be underweight and overweight. And it's these type of skills that FundCalibre looks for when considering a fund for an elite rating. So how does FundCalibre use benchmarks? The FundCalibre process starts with a quantitative tool called AlphaQuest. AlphaQuest compares a fund against its benchmark, strips out market movements, to lay bare the value added by a fund manager and how they consistently have added that value. If you think about it, that's why we don't rate passive or index funds. If you take away the movement of the benchmark, you're left with nothing. AlphaQuest is unique in that it focuses on future performance as well as past performance. Once we have established the consistency of the value added by the manager, AlphaQuest will give a probability score as to how likely a fund is to outperform its benchmark over the next 12 months. AlphaQuest is a hard barrier to pass as we only want the best funds rated. Using this quantitative method allows us to take each fund on its own merits and give a mathematical basis behind our way of selecting the best funds and investment trusts. Once a fund has shown statistically it can outperform, the research team will meet the manager and drill them on their strategy and process to get to understand how, where and why they make their investment decisions. To learn more about AlphaQuest, visit FundCalibre.com.